Hello guys, hope I am on time. So the subject of today is how our trading account works. So in this first 1 hour, as always, I will try to develop this subject. I will try to give you as much information as I can, and then we can go and we can explain everything about what I do and how I carry out my trading account. Now understand that this I have told you before, that in general, if you are going to trade stocks or you are going to invest in companies, in my opinion, this is just an opinion, you can take it or leave it, you should get two accounts, two separate accounts. Okay, so I will tell you the reason. Now, first, it has a relation with two businesses. That means that in your investing account, there is a strategy, there are goals, there are a lot of things that you do in an investing account that you don't do in a trading account, and vice versa. It means what you do in the trading account, you are not going to do in investing. Investing, we begin with this and then we go to trading, because a lot of people they have a very naive idea about investing, because all what you see online, when the people talk, most of these people, most of them, first, they don't invest, they don't know what is really investing, and they give information to others and they explain to them things that they have never done, and they have no idea what they are talking about. Okay, so investing, it's another thing than what you have heard, that for example you buy a stock, a company that is good, and just leave it for 10 years, 20 years, and then you become you will be like Warren Buffett. And so this is not true. This is not true. The fact is, most of the people, when you want to begin an investment, most of the people, they don't have money. Okay? They don't have money. You have a job, you can invest $100, $200. Okay? Most of the people, what they do 401k or other plans, retirement plans. But understand that these types of investment, they have some good advantages, some bad advantages, as you might know. And this is managed by a manager, so you don't manage anything, but you have the ability to change mutual funds, but you can't add stocks or you add other mutual funds than the list they give you. It means you are trapped in this 401k because there is no much choice. For example, you want to buy stocks. It's your 401k, and the company gives you money, they give you a matching, like a contribution. So why these guys they oblige you to buy a mutual fund? Mutual fund, they take fees. It's managed, they have fees. Okay? That's why they don't let you do stocks. So you get trapped in this mutual fund, in this 401k. So you don't have big choice. Now, what do you think of Warren Buffett? Do you think that if it is the case, he was like one of us, Okay, he's just having a job like everybody else, like he was before. You know, when he began like having a job. But he has an excellent job because they make a lot of money as he was a broker. So they make a lot of money in the 60s and the 70s. The commission only is $200 to $300 a commission just to buy or to sell. So these guys make a lot of money. It's not available anymore now. Now, do you think he will accept a mutual fund like a 401k? He will never do it. Do you know the reason why? Because when you study economy and you study finance, you will find out that paying fees for something is not a good thing, especially investment, because they are always going to take some money from you, from your account. There are fees associated. So if you go and you follow these fees, you will be astonished. Okay? So whatever you put, you think that you invested $100, but later you will find out that it is not $100 that you invested. It could be 80, it could be 90, it could be 70. You will never know how much they take. There are a lot of fees, a lot of stuff, and they give you this information, but people they don't go and check these fees. If you ask someone, oh, what are the fees? Oh, you say, no, there is no fees. It is just 1% to 2% to earn. It is not always. It's only 1 year. Okay, so all this information. Hello, Top Series. He said, hello, Karim. Can you explain how Bernie Madoff ran his scam? Okay, Top Series. Yes, Top Series here. I am not here to do a YouTube channel on scams. No, and I don't know this guy, and I don't know what he is doing, but I will check. I will check later what he's doing, but listen. There are a lot of people, okay? Why the scams work? It's not because of the guy who does the scam, okay? The main thing is that people, they get scammed because they are greedy, okay? It's like the other guy who wants to, who was a very, very famous, I think hedge manager or so, and he says to the investors that they will give you 10% for sure, as long as you stay with me. So he get $80 billion. And then it was only a scam, and then they caught him, and then okay. So you see that it means the people, they get scammed because they are greedy, okay. But I am not going to do a session about scams or about this guy. I don't know him, and not in my channel. But I can speak about scams in general, yes, I can speak about that. But looking at people and they say this is a scam or not, this is not my job. Now, as I told you, if let's say Warren Buffett, who is one of the best known wealth managers and investors in the world, suppose that he is like us, like us now. Do you think he will go and do 401k? He might have some money because of his job, but he will make his own individual account or whatever account, and he will buy stocks, because it is the biggest mistake to buy mutual funds or ETFs or so, because most of the time what you get is less. because it is the average of something. Understand that, for example, the investing account, when it is like a mutual fund, each mutual fund, it consists of mini stocks, depending on how much money he has, this manager. It could be 10 billion, 20 billion, 100 million. I don't know how much money, but it is a big money. So he buys the stocks he thinks that are companies that are good. Okay, so during the year or 2 years or 3 years his investment, he will see that some stocks are doing good and some stocks are doing bad. This is what we call investment. It's not that everything will be going okay. So the mutual fund, it's the index. You will find a price. This price is the average of what he has. And understand, it can go up, it can go down. It depends on what we call the stocks that are in, how risky they are. So all this is about investment. So understand, guys, investment, it is not you buy something and then you forgot about your investment, and then when you are at retirement age at 60 or 65, and you see at that time you see how much you have because you have invested. No, it's not like that. And it is not also like what they show, that they show you, for example, someone has begun with $10,000 in 20 years. Now he has 500,000 or 1 million or 2 million. This is not also true. Okay, this is not also true. So to go back to our subject, in investment, it means it is a habit. It means you continue to do investment all your life. It's like trading. Like when you trade, you should trade. In investing, you should invest. In investing, it is not one-time investment. Okay? It is not. Except when there are a lot of types of investment and you want just to diversify. For example, you want to go to Bitcoin and you buy some Bitcoin or whatever. Okay? And you do this as investment and you leave it for 5 years or 7 years or 10 years. Okay? This is like a time of this investment. Cape Town, he says 26% for this year. Yes, it is for like I think 4 or 5 weeks, because we begin our trading account, because I have some problem with this virtual account. I will explain later when I go to the trading, so bear with me. Now, as I told you, investment, it should be something real. It's a habit. You always invest. For example, if you have a job and you have 100, 200 you spare, you should invest. You put it in an account and you buy shares. You buy. I know you could search for companies, a lot of companies, and you search according to the criteria. I have an ebook about how to search for companies and how to do the investment. This is a new ebook. If you have time, you can go just and check. Now, and then let's say you want to buy 10 stocks. You begin to buy progressively. The more you have money, you just buy and leave, buy and leave. These companies that you choose, and you just leave them for years. So you add more shares. For example, let's say you have $2,000. Let's say you bought 4 stocks. 500, 500, 500, 500. Okay? Now after 2 months or 3 months, you have some money and then you buy $2,000. For example, the same stocks, it means you make the shares more and more. So you are buying up and down, and you are always buying and making your account bigger and bigger and bigger. This is one of the keys to success in the investing thing. It's not only you buy you have $10,000, for example, because a lot of people, they have some saving account, and it's a mistake to leave your 10,000. You leave it for 5 years or 10 years. You do nothing with them, thinking that when you invest on any trade, you will lose them, and you say, no, I have this money. But understand that because of inflation, the dollar loses 3% each year. So your money, if you put it for 5 years, so 3 by 5 or by 10 years, okay? So you are losing a lot of value of your money. But if it is in the stock market, the market is always growing. Sometimes it's bad, but it's almost is growing. So your money grows. Sometimes it grows so fast. This will never, no investment in the world will give you such money. Especially either stock market or some kind of other investment that it is so fast. Most of the people, what they know is stock market. Now, I will tell you about my trading account. Now we are speaking about trading account. I put one virtual account, and from last year, because before the broker I was with, it has no virtual account, because this broker, it is a well-known one. It's E-Trade, and I was with Options House, and this Options House, it has a virtual account, but I have never done a virtual account for the guys, for my students, or for whatever. So E-Trade, as a broker, it's a big broker. It buys, or it bought many years ago, it bought Options House. So they deleted this virtual account. I asked them at the time what did happen to it. So they I asked them why you deleted it. He said, okay, they don't need it, but they have been wrong, because after a few years, 1 year, 2 years, or 3 years, last year, I think in April, they bring this virtual account back. So it was in a downtrend, but I need to open one and to let the guys look. So we bought some stocks, we go down, we go up, we go down, and then and when the account begins up, we get back our money, and then when it is like 100, I think 5,000 or 7,000, something happened. I bought an inverse ETF when the market was going down. We began to make money, and then this ETF was stopped by the company it made. Okay, and I was even my own account. It means I have it. It means most of the time most of the stock that I buy in the virtual account, I bought it in my own account, because the stocks that I like, I put them, and that's it. But they took the money. They took the money from the account, from my personal account, and from that, and I don't find the stock. It was crazy. I say, how this ETF is not in my account? I called them, and they told me that the company itself, it will give the money back after a few days. I got the money back, and in our virtual account, they don't want to give me the money back, like in virtual account. because I need that money, because it is the money of the virtual account. It means I was trading, showing people how to trade and the stocks. So I asked the guy why. He told me I can't do nothing. So I asked him what is the solution. He told me you can reset it. So I reset it like I think 4 weeks or 5 weeks ago. Now, I did not begin from the beginning, from the trend. I begin like in the middle of the trend. So I bought the same stocks that I have, and now for Friday I have like 26 point something % for my account. Now we have a lot of stocks. Right now I don't know how many, 10 or 12 stocks. We have big stocks, we have small stocks. It means I will show the guy that you can buy smaller stocks like penny stocks. You can buy bigger stocks. You can buy even bigger and bigger stocks with the portfolio. The portfolio is $100,000, like the portfolio. Now we are at 126 for this 4 weeks or 5 weeks. Okay, so this is in general how the trading account works. And for the investing account, I bought 10 stocks. The companies I choose, there are 10 companies. I put each company $10,000. It means we have $100,000. Now we are at nearly 5%. Because you see the whole market was going down, and then it has been going up. So now I am at 100, nearly 5,000, means 5%. As you might know, the trading account is always volatile than the investing account. The investing account, it goes down little by little, and it goes up little by little. That's why the risk is less. Now, when the risk is less, your money will be less. And the people, this is the people they don't like, is they want to do less risk and they want a huge money. This most of the time, I'm not saying it's impossible, but I say it's very, very dangerous. When you want money, you should risk more. Now, how do you risk more? There are some stocks that are risky, that they move too fast, up and down. So you like them when they are going up, but when they go down, they make a mess as they go up. It means it's the same. But these stocks, when they go up, you can make a high percentage. And this is the stocks that I like. I am always with risk. I am not a guy who do very, very lazy stocks where the stock is $100, it goes 50 cents, $1. It's not my stocks that I buy always. So I always like stocks that move fast. So my trading account that I show, which is the virtual account, is this kind of stocks that I bought, and I showed the guys. I say, okay, these are dangerous. This stock is not dangerous. This is going fast. This is not going fast, and the people can choose whatever stocks they want in their account. Okay, and when you follow, for example, when you are into my subscription, for example, you are following my trading account. Each week I will make a video and you will see which stocks I have, which stocks I sold. And during the week, if I sell stock, I will make a video. I say, okay, guys, I have sold this stock because this and this. Then I will replace it with another stock and I say I bought it because of this and this. So it means my strategies are explained through practice. And this is what I want from my students. It means you should do something with practice. Now, if you want to go to theory, okay, you go to my ebooks or my training by videos, you find everything, you choose whatever you want to do, and you study and you practice whatever you want. But for this trading account, it is a trading account that that you see the stocks, you follow them with me. If I sell, I will tell you why I sold. If I say it's not dangerous, you stay, so you stay. It means you can follow me. And now, if someone wants like 1 month or 5 weeks, let's say 5 weeks or 6 weeks, he can just go inside. Each Friday, I make a search and I make a trading account video. So I will show you what's going on, how much we make, how much we lost, what are the stocks that we bought, what are the stocks that we sold, and why. Now all this information that I supply will explain to you my strategies in clear. My strategies are very, very simple but effective. Okay, simple because there is no lot of things that you should learn. Yes, there are a lot of details you should learn through my training, but they are very simple. They are just rules you should apply. Okay, rules. You do this, you do this, you do this, and then here you do this and you do this and you do that. Okay, if you don't follow the rules, you will never make it as a trader, either by yourself or by someone else, because you should be firm, you should be logical, you should follow the rules and don't change them. Okay, now, so right now I tell you how I do in my trading account. I try to explain how the account is made, like stocks, but I understand that I will not show you my trading account or my stocks. Never. You can do a 1 month subscription and you see that. No problem. So, for example, let's see. I want just to see some explanation. Okay, so I will just begin to explain. And guys, as I am explaining, guys, ask your questions, and whenever I finish, I will try to answer you. Okay, so here is, let's say, the trading account. So let's make this. Trading account. So let's say I divide the thing into 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, let's make them smaller. Okay, so 10. Now let's say that our account is like 100,000. So I will just give you this example, but you can do whatever you want with your account. So it's $100,000 account. So now we have 10, if you can see here, stocks. So stocks we have 10. Now most of the time you can put big positions, you can put small positions, as you like. Okay, so the rule is that you should take advantage of is the more positions, the less risky is. So I will try to. Okay, let's say you make 10K for each position. Okay, 10K. So its position, you can put 10K. Okay. It could be a little longer, but it's okay. Okay. $10,000. So by this, you will have 10 stocks, and this is your account, which is $100,000. Okay. Now, something else. Let's say this stock is, let's say, $100. This is the stock that you bought. It's $100. So you just try to divide. Okay, try to divide this 100 by 10. Okay, 10,000, and the stock is $100. Okay, and then you can see how many shares, okay, you want to buy. Okay, $10,000. So here we have 10 by 10, so you can buy 100 shares. Okay, but let's say you have $10,000 and you want to buy a stock. Let's say it is $50. Okay, this is just examples. So you can buy 200 shares. Okay, so this is just an example of how you do. Now, but suppose that you, as an example, you want to buy penny stocks. Understand that your account is big. If you put penny stocks like $10,000 for each, your account will be so volatile. What you should do, you can, for example, let's say this 10,000, this 10,000. What do? You do 10. 5K, for example. Okay, and here you have 5K, and here you have 5K, and here I will fix it right now when I finish. 5K. So you have here 80,000. It means when you stop here, you will be, this all is $80,000. Okay, 80,000, and those four are 20,000. Okay, so since 9, 10, and then we have here 11, and then here we have 12. So 5,000, 5,000, 5,000, 5,000. This is 20,000. Now, these stocks, for example, here you are buying the stock. Let's say it is $1. Okay. So you are buying 5,000 shares of this stock. Okay. Now, the reason for that is that when we have smaller stocks, you should give them just small amounts. Okay, so this is how I always do in my account in order to be medium, not very high risk, not very slow. So it is medium. Okay, if I want to make my my trading account go quicker, I can put 2 stocks or 3 stocks like here. Okay, I can put these 3 stocks. We have 30,000. Okay, so let's say here it becomes 30,000, and this is 50,000. Okay, so let's say this 1, 2, 3, 4, 5. This is 50,000, and then I have found a stock that I like too much, and I expect too much from this stock. I give it 30,000. It means it's only one stock. Okay, it's only one stock. I give 10,000. I give 30k in this stock. Okay, so here your account will become more risky because you are putting bigger positions. So what if in the other thing, what if you put, let's say here, let's say I give you an example. Okay, I give you an example. Let's say you do only one position with 100k. So you find a stock and you think that it is the best stock that you like, and you buy. Now here, what does it mean when you do 100,000 in one stock? Okay, so what does it mean? One stock. So here it means that the risk is too much. So here your account is at high risk. Okay, high risk. How? Because your stock, if it goes, let's say if it goes down, as an example, let's say if it goes 10%, because when you are doing high risk stocks, you should leave room to this stock to move. You can't put, for example, a 1% stop loss for a stock that it is a volatile stock. You can't do that. So you should leave it 10, 20, 30, depending on the stock percent. It means you leave the stock move and freely, and you think that this stock is doing good. Sometimes you get a big loss when you are following the stock. It was good.